it shouldn't be a surprise that Russia is standing behind this change of the system, and China for that matter. Obviously, Russia being directly affected by the sanctions. And of course, I think China is very wise in the way that they are also approaching these things, but at the same time, understand that this is something you cannot really cross that bridge, if you will, until you have mass adoption. So yes, I think they wish they could break free from the current system and go to one that is more multipolar, but understand that some of the countries there are not ready to turn their back on the West yet. This is a very big decision that can't be done until and if all of the ducks are in a row, for sure.
In today's news recap, silver short squeeze coming. The Federal Reserve cut interest rates for the first time in over 4 years in September, sending gold past a record-setting $2,500 an ounce. The aggressive 0.5 percentage point reduction was in response to the Fed's significant progress in bringing down inflation, as well as a slowing U.S. economy, evoking recession fears. Gold's rally, which started in mid-February, has been underpinned by increased geopolitical risks, the upcoming U.S. election, central bank buying, and slowing ETF sales. It last traded at $2,744 an ounce, up 37% so far in 2024. But silver has done even better, notching a year-to-date gain of 46%. Spot silver is now worth $33.67 as of Monday, 2030 New York time. Last Tuesday, it hit $34, the highest level since 2012. Silver has benefited mostly due to physical buying in India and China. So-called paper silver has also been a factor. In July, 2 months of outflows reversed to inflows. However, October has been the best month on record for gold ETFs, after silver struck a near 12-year peak on Monday, October. 21, Citi Research revised its 6 to 12-month forecast for silver prices upward to $40 per ounce from $38 per ounce. UBS Bank is also bullish on silver, with the caveat that the gold-silver ratio rose above 85 to 1 in September after hitting lows of around 73x in May. Despite this, we maintain our view that silver is set to benefit from a rising gold price environment, which is aligned with Fed policy easing. Analysts at the bank said, our expectation that the silver market will remain in deficit over the coming years implies continuous declines in above-ground inventories, which should help fundamentally underpin prices as well as act as a tailwind for investor interest. We see silver outperforming gold over 12 months, with the potential for its ratio to test the long-term average of just below 70x. The unexpected price surge has put 5 U.S. banks at risk of substantial losses due to their large silver short positions. A short squeeze refers to a situation where an individual or legal entity sells an asset in the future without owning it first, in the hope of buying it back later at a lower price to make a profit. However, if the price of this asset increases instead of falling as expected, this individual or legal entity is forced to buy it quickly to honor the delivery of their forward sale. This hasty buying movement then contributes to accentuating the rise in prices. Now we'll show you more clips of the latest interview, but remember to smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Tension.
Yeah, well, I mean, the BRICS is a growing chorus of countries. It's originally started about 18 years ago, the acronym for Brazil, Russia, India, China, South Africa. It has grown to 9 countries when you add in the others: Egypt, Ethiopia, Iran, United Arab Emirates, and Saudi Arabia straddling the fence. And the meeting that we had here in Russia, a lot of things were on the table. Some things are very interesting how they played out, but some of the things that people were expecting was again some form of a common settlement currency, and the BIS kind of put a knife into that, which I think we'll talk about in a little bit. But some things came out of the BRICS meeting in terms of, look, we're seeing, I don't know, as many as 40 countries have informally applied to the meeting, or to the fold rather, thrown their hat into the ring, with, I don't know, 20, 25 that have formally applied and up to 40 that have expressed interest. And this is a trend that is growing, but one that will, I think, be met with a lot of challenges. And the big pushback that a lot of people have with this group is trust. Who's going to trust who? These countries are very much, in many ways, opposed on certain narratives. Is the conventional wisdom, and I think that, at least on the onset, what struck me was what they're trying to show is unity, strength through unity. And I'll just say that in two examples that stuck out to me, they made a very big deal about showing how Modi from India and Xi Jinping from China met on the sidelines to agree on issues regarding their border in Kashmir, that it was very friendly, that they are moving towards common goals and peace through unity. And the same thing could be said of Iran and Saudi Arabia, Sunni and Shiite countries that for years, if not centuries, have been at each other's throats. China brokered a peace deal between them last year, and lo and behold, talk of building embassies in each other's countries, and it was announced that they're going to have a joint naval exercise. So, look, I think we'll get into what happened there, but what they're trying to show the world is that this is a new way of multipolarity, where it is not about coercion, but rather cooperation. And they're really trying to make, I think, an effort to show that, which is a good thing, of course. But in essence, what BRICS is to me, Jay, is a group of countries that are pushing back against the Western hegemony, pushing back against the ability of the West to make rules and to impose sanctions, and at the same time to really, I think, disrespect, if you will, the privilege of being the world reserve currency in the way that we are conducting our fiscal and monetary affairs.
More news recap related to the topic that you should be on top of from Russia with love. Silver has not historically been associated with central banks. The relatively low price of silver versus gold means 70 to 80 times more silver than gold would have to be stored to attain value equivalency. Those who have been following the trend of Russia accumulating gold to diversify its foreign exchange reserves as it dumps U.S. treasuries will not be surprised to learn that Russia has announced plans to add silver to its reserves. The addition of silver to its already substantial holdings of gold, platinum, and palladium is outlined in the country's draft federal budget, which proposes an annual allocation of 51.5 billion rubles for precious metals purchases through 2027. John Stuart Little, an analyst at the Silver Academy, warns of the potential ripple effects, especially if other countries follow Russia's lead in building up their silver war chests. The ramifications of this shift extend beyond mere price movements. A significant revaluation of silver could disrupt existing financial paradigms, challenging the dominance of fiat currencies and potentially accelerating the transition towards a multipolar economic world order. The Silver Academy's report suggests that this move could be a game changer for the precious metals market. As the BRICS nations continue to explore alternatives to the dollar-centric financial system, including the possibility of a commodity-backed currency, silver's role could become even more pivotal, Little concludes. On the demand side, silver, like gold, is a precious metal that offers investors protection during times of economic and political uncertainty. However, much of silver's value is derived from its industrial demand. It's estimated around 60% of silver is utilized in industrial applications like solar and electronics, leaving only 40% for investing. A report by Oxford Economics, commissioned by the Silver Institute, found that demand for these sectors is forecast to increase by 42% between 2023 and 2033. The transition to an electrified economy doesn't happen without copper and silver, which is why, in my opinion, they are among the most highly investable commodities now and for the foreseeable future. The danger for end users and opportunity for resource investors of coming shortages for both metals only strengthens my thesis. In a recent commentary, the Silver Institute said industrial demand rose 11% last year to a new record of 654.4 million ounces, smashing the old record set in 2022. In fact, demand exceeded supply for the third year in a row. Now we'll show you more clips, but first smash the subscribe button and share this video with a stacker because more people need to be in the know. Let's get back into the episode.
The entire BRICS alliance is one of cooperation. There is no mandate that holds them all together. It's more like, I guess you could say, action and behavior oriented and reputation oriented in the respect that it's cooperation. And really that's what good business is. It's a handshake. It's earning trust in a system that is certainly lacking trust. And, again, they reiterated over and over again their commitment to enhancing financial cooperation and cross-border payment solutions. And all of this is to break free from the West. So you're right. There is a common enemy. My enemy's enemy is my friend, that kind of thing, or a common goal. And one would wonder if the divisiveness, that camel sticks its nose under the tent again once and if they were to achieve their interests. But look, for now, that is really something that I saw as very important. This came out the very first day of the meeting, and they wanted really to make it seem as though these are countries pulling together and putting aside differences. Of course, certain things happened throughout the meeting that changed my focus on what was really very important. But that is one of them, of course, certainly. There are other very important things that have come out of this meeting. But one thing is in my opinion, for sure, and it's really not debatable, that this is a growing chorus of countries. And while there will be setbacks, while there will be challenges, I think to underestimate it is a big mistake. Again, 47 countries have expressed interest, 26 formally, 21 informally, and I think that list will grow as they really solidify everything that they're trying to do in all areas, from commerce, from trade routes, from common settlement currencies, to trading in local currencies, to commodities, to commodity exchanges, to all sorts of things that are on the docket. I think it's important to understand that this is one of these deals that, myself included, I think it's easy to expect things to happen faster than they probably ought to. And one thing that they have exhibited, I think, is restraint in that matter, in an attempt to do things the right way. And by some of the things that we're seeing, I would argue that they are. They joined the Shanghai Cooperation Organization. They've joined the New Development Bank. They became the 5th full participant in Enbridge. And there's some new information on Enbridge that we need to discuss, because that was something that really has been the focus of anyone commenting on the BRICS for the past few months, a common settlement currency that we were told by Dilma Rousseff, the former president of Brazil and the head of the New Development Bank, that they had agreed in principle to this new system. But Saudi Arabia, to me, look, you can point to the G7 meeting a few months ago, and at the same time there was a BRICS meeting in Novograd, Russia, where Dilma Rousseff made these statements, where they were invited to the G7 meeting and turned it down and instead sent their delegates to the BRICS. So yes, on one hand, they're straddling that line. On the other hand, by their actions, you see turning down of the G7 invitation, going to the BRICS meeting, being on the Belt Road Initiative with all the other OPEC countries, being the fifth full-time participant in Enbridge, which is the cross-border payment system that they are trying to bring to the fold. And again, we need to talk about that. But a system that's not compatible with dollars, that is supposedly the in principle agreed upon trade platform for cross-border settlement outside the SWIFT system. And between all of these things, plus in August of this year, not re-signing what it amounts to an exclusivity deal for energy settlement with the dollar, not saying we won't take it, but that we're going to take other things as well. You could argue that they are just masterfully playing both sides, but their actions lean, in my mind, to the BRICS.
Okay.
I guess they saw how we dealt with Saddam Hussein and Gaddafi, both who had expressed interest in deviating from oil sales in dollars, and maybe they understand that this is something that, again, that you don't do it until all of your ducks are in a row, and they're playing both sides as far as I'm concerned. But yes, conspicuous.
What do you think of today's show? Do you agree with Schectman's take on the mounting pressures within the banking system and the importance of securing wealth in these uncertain times? Andy highlighted the vulnerabilities in traditional banking, from rising interest rates to shifting global alliances, and why precious metals like gold and silver are increasingly seen as safe havens. Let us know your thoughts in the comments, and be sure to join us next time as we continue exploring these critical financial trends and strategies to stay prepared. Thanks for watching.